Hello traders, Gary Wagner here just after 2 o'clock in Honolulu, 8 o'clock in New York. It is Wednesday, April the 1st, 2020, and this is the daily report for gold and silver. We had wild gyrations through the financial markets, both overseas as well as here. In New York, gold did trade, but only mildly higher. At that point, it was up about $6 and traded to a high of just above 1,600, but closed below 1,600, and it also closed below the 50-day moving average. That all changed when Thursday morning trading began in Australia, which was just about an hour ago, and now we have gold trading anywhere between 1605 and 1607. We did put out a trade recommendation. Traders taking that call got in either at 1602 or 1603. On today's show, I will talk about why we entered the market, the rationale behind it technically, as well as fundamentally. That's in the opening letter. We also placed a stop. We'll define exactly why we did that. But first, to the price board. Without a doubt, we had extremely interesting action in the financial markets today. We did have downside pressure in the NASDAQ Composite, the S&P, along with all of the stocks and the Dow Jones Industrial Average, all closing down by about 4% on the day. Of course, some individual stocks did worse, some did better. As to gold, gold traded very, very lackluster until it reopened in Australia. Now we are looking at the prices which have occurred on Thursday morning in Australia. Of course, we're recording this in the afternoon on Wednesday. We're currently at 1605.90, up $14.50, almost a full percent. On today's show, I want to look at a trade alert that I sent out, give you the rationale behind sending the trade alert out, and then most importantly, why we're putting our stop where we are. This on the right-hand side, as you can see, is a daily chart. And what was most interesting to me was the fact that even though in the New York session, which is this first candle right here, it opened and closed below the 50-day average. When we went into Australia, it changed because we opened and closed above the 50-day average. More on that when we pull up our technical studies. Now, 1605.90, that's our current print. When we go to spot, we're going to see that that is just a little bit different. But what is unusual is the spread is really beginning to narrow again. We had 1609. Call this 1592. So we're looking at a spread of about $15, where it was about 25 yesterday. Platinum, 720.10. Palladium at 2138.7. And then silver is currently trading at $14.10. And that was all with some moderate to strong dollar strength today, up almost 0.5% at 99.57. Let's take a look at our technical studies. And traders, I want to give you a sense for why we went ahead and issued a buy signal today, and also speak to you about why we put our stop where we did. If we look at the most recent action, this candle here with the long doji, let me widen that a bit, represents trading in New York. And you can see that we had a fairly decent range when we take a look at the activity that transpired. We saw the market trade to a low today of approximately 1575. That is the bottom of this candle right here. And then when we look at our highs for the day, they come in at roughly 1600, just above that price point. This is 1603 here. So we'll call this move 1610. So a pretty dynamic range. However, it opened and closed below the 50-day moving average. And so as long as that's in place, we're not getting the kind of information that I'm looking for to enter the trade. However, all of that changed when it opened in Australia. And Australia represents the beginning of Thursday's trading activity. We can see that right here, of course. But what's most impressive about it is the fact that it did open above the 50-day moving average. And to me, that is significant. and it is trading well above it right now. Our current print is approximately 1606, 1605, right in that area. Now, we sent out a special trade alert, and our recommendation on the trade alert was to go long June gold because the April is coming to expiration right now. Traders taking that call got in between 02 and 04. In other words, what we were looking at was getting in between 1602 and 1604. Now, we'll talk about our stop placement in a second, but before we do that, I do want to talk about our potential for upside moves. And really, the best way to express that is to continue to look at a daily candlestick chart. We noticed that back in November through December, going into 2020, we were trading well below the 50-day moving average. You can see the cross here, and that average was going lower until we got a breakout. That breakout occurred probably last week of December as we started to move up. This high right here represents 1613. It was the Iraqi United States scenario, and that became an ultimate level of resistance until it broke mid-February. Once it broke mid-February, it had a number of stabs at 1700. This was very unsuccessful. This attempt actually was successful. Market moved to as high, I believe, was 1703 and change, and then we had these series of tops that came in, these tweezer tops, both on a daily candle, and then we saw a slight decline in the market. What I like about this trade is two things. First, it is back above the 50-day moving average, and most importantly, it is currently above 1603, and that is important because that is the 38% Fibonacci retracement area. So with that information in mind, let's talk about our upside target as well as our stop. First of all, we are currently trading, as I said, at about 1605, 1606. The first real level, if any, that we're going to run into in terms of resistance is probably going to come around 1640. That is the 23% retracement level. When we go past that, we have these series of tops that come in just before and here slightly above 1700. So ultimately, what I would hope for is that we get some kind of a move at least to break 1700 or to kind of fall short as we saw here and here. So if we see the market move past even 85 or so, that's probably going to be where we try to get out at if the market is kind enough to move that high. If we see the market, for example, move up and find resistance at this area, which is 40.41, we would look to have trailed our stop up or at least look to pull profits at that if we see it backing down. However, if it burns straight through there, as I said, I think we could easily get 1680 and above. Now, on the left-hand side, you see the trade report that was sent out by email. It goes out by email as well as SMS text message. However, it seems like the SMS gets there faster. So I recommend for all subscribers that have not, they set up their phone number to be getting a text message from us. We talk about the fact that we're buying June gold. We're giving you the symbol here. And we're also saying that we want to put a protective stop a few dollars below 1560. And let me spend a second to kind of give you an idea of why. If we draw a line in this area, there's 1650. And the other thing that I would like to do, of course, is take off the one chart. And when we do that, you can see a couple of different things about this particular price point. Of course, the price point I'm talking about is 1560, and I said to place it a couple dollars really below that price point. Let me make this even. One of the primary reasons was that's below this particular low. This is the second of those two large moves here and here that occurred last week. So it's an area that we certainly don't want to be long if it breaks that. The other rationale behind putting it where we did was the fact that when we look at the activity, you can see that right in this area, at the beginning of January and into February, First, the market broke to the upside with a couple of different high prices here and here, but ultimately it seemed as though this level was a very, very strong level of resistance until we got the solid breakout. So the rationale behind putting our stop at 1560 was to make sure that if it goes below this particular candle here, we limit our loss. But I truly believe that we could see this market trade at a minimum of 1641, maximum on this particular rally of about 1700, a little bit above or below. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.